Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello, and welcome to the podcast. Thank you so much for tuning in. I appreciate it. You guys are so loyal, and welcome to those of you who are new. Thanks for being here. Thanks for giving me an opportunity. Okay, today we are going to talk about what that means to pay yourself back. And for some people, that is super hard to understand. And for some people, that is super easy to understand. But a lot of people don't ask me the question, Mary Jo, I'm confused. What does that mean? Because they feel like they're too dumb. They're like, I should know this. It's easy. My husband or my wife gets it. Why am I not getting it? And I had this conversation with some new clients. And here's what I find. We're on Zoom together, but I can still see your faces. I'm still watching you. I'm watching your body language, and I can tell if you are not getting it. And I'm not going to stop explaining until you understand. And so in this situation, these new clients had extra questions. So we sat down in a meeting and he got it. He understood about 90% of it. And she was a little bit lost, but she keeps the books. So it's imperative that she understand what that means to pay yourself back. And so let's just use an example, because I know she is not the only one confused by this. And this may be something that is confusing someone out there listening. And you say, you know what? I just don't get it. So I'm not going to do this because I don't understand. So here's an example. Here is their question. They had some money saved up for retirement. She had some money in a 401k or an IRA or something. And they took that money out of the 401k or IRA and they used it to pay off debt. Before they met me, may I clarify? So they used it to pay off a bunch of farm debt. So her concern is now, how are we going to retire? That was retirement money. I said, well, just pay yourself back. But that goes against everything that we're taught. We're taught to pay cash for things, and now the debt's paid off and we're good. Yes, the debt is paid off. But because we paid the debt off, we don't have $100,000 of payments anymore. They're gone. They're done. The bank does not require that money in payments every year. So now what do we do with that $100,000? You're going to pay yourself back for the money that you took from the retirement account to pay off debt. If we pay ourselves back, we what? Now have money for retirement again. We can utilize money that we have in a savings account. I don't even care. Just take the policy out of it for a second. We can use money that we have in a savings account and we can take it and buy a vehicle and then make payments back to savings for the next 5 years, plus interest. Then what? We have it there to use again. We can use our retirement money as long as we pay it back. No different than if we borrow from our 401k and we pay it back. That is easy in our brain, right? What is so super hard for some people is that they don't think of themselves as the banker. Nelson said we need to be bankers and we need to own the bank. So if we need to be the banker, then we need to make sure that we put our banker hat on. So think of it this way. Let's say that her name was Susie, okay? The bank of Susie had $200,000 in a 401k. John needed money. So Susie's bank lent money to John. We didn't give money to John. We lent money to John. Now John has to pay Susie back. And Susie says, what does that look like? I don't understand. Where am I supposed to put that? Well, it's the same thing. If you're keeping your books in QuickBooks or whatever system you're using, now you put that in as a line item, right? We owe the bank of Susie $200,000. And Susie told John she wants it paid back at 7% over the next 7 years. John agreed because the Susie's a lot easier to deal with than the bank down the street. If he has to miss a payment, she'll probably let him miss a payment and then extend it back. So we're going to take the $200,000 loan and we are going to put it in QuickBooks that the farm, John, owes money to Susie over 7 years. Okay. So let's just figure it's going to be about a $30,000 a year payment, let's say. So $30,000 goes to Susie year one. Where does Susie put the money? Was their next question. Well, Susie can put the money in a savings account. Susie can put the money in a life insurance policy as premium. Susie could put it back in an IRA. I don't care where you put it. It's your money. Granted, I have thoughts and ideas. So this couple, they are going to take some of that and put it into life insurance premium. The remainder of it is going to go into a savings account that will be separate from the rest of their accounts. Now, if you've read my book, you know I do not like it when people compartmentalize money. However, there is a time and a place where we have to say, you know what? I am not the most honest steward of my money. I'm not the most honest banker. So while I get this figured out, I am going to start a separate account that cannot be touched. Some of it's going to go there. The rest of it's going to go into the life insurance policy. Now the life insurance policy has cash value they can use right away. They could use a savings account if they like. But when we got down to age 65, she had almost $1 million of cash value. Did we replace what we took from her? Absolutely. And we utilized freed up money. This is what human nature says. This is what, not even human nature, this is what the talking heads tell us. Let's take the $200,000 and let's pay off debt. Now we're debt free. So now we have cash flow coming in and we do what? We go buy something else because we have cash flow and we have all this excess money and we freed up, $100,000 a year, for example. Okay, great. Now let's go buy something with that $100,000. Are you going to pay cash for that something or are you going to go finance something and add to the payments? If we freed up money, it is now an opportunity to build the system and create the pool of money we get to borrow from. Do you have to do the paperwork when you are the banker? Yes, you do. When you walk into the bank and they say, hey, we need fees. We have a transaction fee and we have this fee and that fee and this charge. And oh my gosh, it's absolutely ridiculous. All the fees. It is because they have paperwork to do. They have attorneys. They have a board. They have employees, right? They have people that have to make sure that you're managing your money and that you're going to pay their bill. This is the same thing when you are the banker. You need to find an amortization schedule. And for those people that are our clients, we help them with this. So if you are a client listening and you need one, let us know. But you need to find an amortization schedule so that you then can go online, put in your numbers, how much you borrowed, how much you want to pay it back, how long you want to take it to pay it back. Because remember, the life insurance company does not care how long you take to pay it back. They absolutely don't care. You're the banker. You get to decide that. So you go online, you find your amortization schedule, you take that payment amount, and you put it into QuickBooks that we owe the Bank of Susie. Now, I personally, if it was not going to cause issues, I personally would put that in my documentation and on my balance sheet for the bank. So when the bank wants to decide if they give me a loan or not, well, I have this payment back to myself. Now, you can neglect it and you could keep it off of there for bank loan purposes, but you better darn well have it in your books that you owe yourself, because if you miss one payment, guess what? You're probably never going to continue to make those payments and recoup the money that you borrowed from yourself. Instead, at that point, you stole from yourself. Now, what I heard this couple say is they said, Mary Jo, when you say pay yourself back, that is so confusing to me. But if I say I have to pay the Bank of Susie, that makes more sense. It is a matter of getting our brain to kind of rewire what we've been so ingrained to think. And so I don't really care how you have to think about it, but a lot of times this is what I have to do. Is I have to make the wife the banker, because typically in the situations I've been in, the wife is the one that's lending money to the husband because she works off the farm. So the wife has a pool of money and she then lends it to the husband for the farm. Okay. So they can't quite grasp and get their head around why it would be paid back. Because it went into the farm, it went into a combine, it went into a tractor, it went into a piece of land. And this particular client said the same thing. Well, we paid some land off. Well, I don't care. I said, that's not retirement. You have to sell the land in order to have the cash flow to live during retirement. We still want the cash. So he still needs to pay you back for the land. Because you lent him the money, you didn't give him the money. Here's another thing to think about. If I came to you and said, hey, Jake, I need some money, are you going to give it to me or are you going to want it paid back? You're going to want it paid back. Why do you treat it differently if I ask you for money versus if you're asking for your own money? Try to split yourself in half and say, okay, the side of me that needs a loan is going to come to the side of me that is frugal and has the money. We have to put our banker hat on. This also helps if the farm is set up like an LLC or an S Corp or a corporation, because now you think of it as a separate entity. This is another challenge we have in the farming industry, is that we think of our farm as just a farm. It's part of us, when in fact it is not. It is a business. And so if we personally are working off the farm, we personally need to lend money to the farm. I don't care if you have money coming from an outside entity going to the farm, then that money needs to be lent to the farm, not given to the farm. And I seen this on one of my Facebook ads that I had running. Oh my goodness. It is just, we can't make it. Nobody can get started. Oh, the negativity. I have been farming for 15 years and there's no way I'm going to ever be able to stop working off the farm. Are you keeping your books? Are you treating the farm like a business? Are you lending the farm money or are you giving the farm money? Because if you're giving the farm money, you're a terrible banker. If you are giving family and friends money, you are a terrible banker. If you are lending money to somebody else at 2 and 3%, you are a terrible banker. We are not the bank down the street who can lend money at 2 and 3%. If you are lending money to an entity that you do not have anything for collateral, that is an unsecured loan. Right now, last I checked, they're about 7%. You should at least be lending at 7%. Many people are lending at 10 to 15. Be the banker. Put the banker hat on and sit behind your table and pretend like it's a desk and say, okay, I am the banker. What would my banker do? If your banker is going to say, you know what? I don't know. Can you afford it? Then you need to ask yourself that same question. Can you afford it? The Bank of Susie needs to ask Susie, can you afford it? What is that going to look like for a payment a month? For some people, this is very, very easy and they just get it. For others, it is, oh, I just need a little explanation. And then there are others who just can't quite grasp it until they do it. Now, let me tell you, I was very confused over the concept when I was first introduced to it. And I did not believe that it worked. So if you guys have not heard this before, I was a skeptic all the way. I did not believe that this worked. So I came home and I got my daughter's Monopoly game and I took out some money and I cut little pieces of paper up into cents. And I took money from one pile and put it on another pile and paid it back plus interest and did it again. And I was like, oh my gosh, this totally works. This is exactly what Nelson's talking about. This absolutely works. But I had to see it. I am a very visual person. I am very hands-on. When I learn, I typically learn best from mistakes. Or I learn best from when something is applied, that I can see it in action. Now, this drives a lot of people crazy, especially creative people. It drives them insane because I need to see it. But that's just how I learn. I wish I'd have known that in school. In fact, I wish the teachers would have known that in school. But when we have somebody that is like that and learns that way, we have to figure out how to make it work. So I don't care if you have to actually sit behind the table and go around the table back and forth and pretend like you're the banker and you're the borrower. I don't really care. Whatever works for you, but it's going to take some time to rewire that brain. So don't feel bad. Don't think that you're stupid because you don't get it. That has nothing to do with it. It's just that you've never been explained it before, right? There are a lot of people that don't have the patience to teach that kind of stuff. But because I'm like that, I get it. And she looked at her husband in the meeting and said, well, I'm glad that you get this. I said, oh, I'm not stopping till you do. Because if something happens to him, she needs to understand it. We cannot just go, oh, well, I don't get it. I'm too dumb. No, this is very easy. And remember my client, Nate, way back in the podcast I interviewed with him. And he said, this is really simple when you quit making it so hard. It's very simple when you quit making it so hard. And we tend to make it hard because we just don't have an idea of what we are talking about because we've never heard it. So here I am breaking the walls, and sometimes the walls are a little bit harder to break than others, but it's so worth it in the end. Ask the questions. If you don't ask the questions because you think they're stupid, how do you ever get the answer? And yes, I drive people insane as well because I always have a ton of questions. And then there's my wonderful husband who has none. I don't know how that happens. How do you not have questions? My poor contractors that are working on our house, it's just every day, 1, 2, 3, 4, 5, maybe 10, maybe 14. I don't know. I just want an update on this. I have questions. I want to know stuff. And so don't think that's a bad thing. It's not. It's how we are educated. Okay, I hope that helped at least one of you. That will make me happy, happy, happy. Let me know, you guys, if there is a topic that you want discussed. I am trying so very hard to do client interviews, and everybody is so very busy. So, I hate to impose on people. But let me know if there's a topic you want addressed. I would be super happy to cover that. If you have not gotten the book Farming Without the Bank, please do so. And you can go to farmingwithoutthebank.com, grab it there, and you can grab Nelson's book, Becoming Your Own Banker, or even Building Your Warehouse of Wealth. If you guys have read everything and you are an avid listener and you have read everything, but you have not picked up Building Your Warehouse of Wealth, please do so, because that book is Nelson's second book and it is super good. I will most likely be doing book reviews on that soon. So go ahead, grab that as well. If you need me, you know where to find me, Mary Jo at withoutthebank.com. You guys have a fantastic rest of your week.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.